Ever wonder what would happen if you could trade Bitcoin like stocks? Welcome to the world of Bitcoin ETFs, a realm where the digital gold, Bitcoin, meets traditional stock exchanges. This innovative concept unlocks a new dimension for Bitcoin, potentially ushering it into mainstream acceptance. Just imagine your favorite cryptocurrency, now trading on Wall Street. But as with any financial innovation, it's not without its fair share of complexities. But is it all sunshine and rainbows? Let's delve deeper. Bitcoin ETFs present some tantalizing advantages. The first of these is increased accessibility for traditional investors. Bitcoin ETFs essentially bridge the gap between the age-old world of traditional finance and the new age world of cryptocurrencies. They do so by packaging Bitcoin in a format that is familiar and palatable to the conventional investor. This means instead of having to navigate the often confusing world of crypto wallets, blockchain addresses, and private keys, investors can easily buy and sell Bitcoin ETFs just like they would any other ETF or stock on a traditional exchange. This brings us to the second advantage, the potential for better regulation. By their very nature, ETFs are subject to securities laws and are regulated by financial authorities. In the United States, for instance, Bitcoin ETFs fall under the watchful eye of the Securities and Exchange Commission. This level of oversight can provide an additional layer of security and protection for investors, helping to mitigate some of the risks associated with the unregulated nature of cryptocurrencies. The third pro of Bitcoin ETFs is the increased liquidity they offer. Because ETFs trade on traditional exchanges, they provide a more liquid market than Bitcoin itself. This means investors can easily and quickly buy or sell shares of the ETF without significantly impacting the price. The increased liquidity also contributes to better price discovery, which is a key element in a healthy and efficient market. Lastly, Bitcoin ETFs provide a way for investors to gain exposure to Bitcoin without actually having to own the underlying asset. This can be particularly beneficial for those who want to speculate on the price of Bitcoin, but do not want to deal with the complexities and potential security risks of owning and storing the cryptocurrency themselves. In conclusion, Bitcoin ETFs offer a number of benefits, including increased accessibility for traditional investors, potential for better regulation, increased liquidity, and the ability to gain exposure to Bitcoin without owning the underlying asset. Sounds pretty great, right? But every rose has its thorn. While Bitcoin ETFs have their perks, there are also some potential pitfalls. One of the most significant concerns is the potential for market manipulation. Unlike traditional markets, where there are mechanisms in place to prevent such practices, the cryptocurrency market is still in its infancy. It's like the Wild West out there, with very few rules and regulations. This lack of oversight could potentially make Bitcoin ETFs an easy target for manipulative practices, which could affect the ETF's price and, ultimately, your investment. Another downside is that when you invest in a Bitcoin ETF, you're not actually owning the underlying Bitcoin. Instead, you're buying shares in a fund that owns Bitcoin. While this might not seem like a big deal, it does mean that you won't have the same level of control over your investment. You can't move your Bitcoin to a private wallet, for instance, or use it to make purchases. Basically, you're putting your trust in the hands of the fund managers, which is a bit of a departure from the decentralized ethos of Bitcoin. And then there's the issue of regulation. While some might argue that increased regulation is a good thing, as it can help protect investors, it can also stifle innovation. The cryptocurrency space has been a hotbed of creativity and innovation, largely because it has been relatively unregulated. But once you introduce something like a Bitcoin ETF into the mix, which is subject to all sorts of financial regulations, it could potentially slow down the pace of innovation. Finally, it's worth noting that Bitcoin ETFs can come with higher fees than buying Bitcoin directly. These fees, known as expense ratios, are used to cover the fund's operating expenses. While they might seem small, they can add up over time and eat into your potential returns. So while Bitcoin ETFs offer a more accessible and arguably safer way to invest in Bitcoin, they are not without their drawbacks. You could be exposed to market manipulation, you won't truly own the underlying Bitcoin, and you might face higher fees and increased regulation. So it's not all a bed of roses. It's a face-off, Bitcoin ETFs versus traditional Bitcoin investment. Picture this, two heavyweights in the crypto world, each with their unique features, strengths, and weaknesses. Let's dive into the ring and see how they stack up. Bitcoin ETFs, or exchange-traded funds, are a relatively new player in the game. They're like a bridge, connecting the traditional finance world with the innovative realm of cryptocurrencies. With Bitcoin ETFs, investors can get a piece of the Bitcoin action without the need to directly buy, store, or manage the digital asset. It's a more accessible route for those who may be a little hesitant about diving headfirst into the deep end of the crypto pool. Contrastingly, traditional Bitcoin investment is like taking the plunge, diving straight into the deep end. It involves buying Bitcoin directly from a cryptocurrency exchange and then storing it in a digital wallet. This method gives the investor full control over their Bitcoin, but with great power comes great responsibility. It's a method that requires a level of tech savviness and a willingness to navigate the volatile waves of the crypto market. In terms of risk, both methods have their fair share. Bitcoin ETFs, being tied to traditional financial markets, are subject to the same regulations and safeguards. They offer a level of protection, but they're also subject to the ups and downs of the stock market. On the other hand, traditional Bitcoin investment, while potentially offering higher rewards, also comes with higher risks. The crypto market is notorious for its volatility, meaning your investment can skyrocket or plummet in a matter of hours. As for potential rewards, it's a bit of a toss-up. Bitcoin ETFs offer a more stable, albeit potentially slower, growth trajectory. Traditional Bitcoin investment, while riskier, could lead to significant gains if the market swings in your favor. In the end, it's all about preference and risk tolerance. Bitcoin ETFs offer a more regulated and accessible way into the crypto world, while traditional Bitcoin investment provides an unfiltered direct exposure to the highs and lows of the crypto market. Both paths have their own unique twists and turns. So what does the future hold for Bitcoin ETFs? This is a question that sparks curiosity in the minds of many. As we peer into the crystal ball of possibility, we see a number of potential scenarios unfolding. One of the key factors that will shape the future of Bitcoin ETFs is regulation. Governments and financial authorities around the world are grappling with how to manage this new frontier of finance. Some countries, like the United States, have already approved the trading of Bitcoin ETFs, and it seems likely that others will follow suit. As more countries open their doors to Bitcoin ETFs, we can expect to see an increase in the availability and diversity of these funds. But it's not just about more Bitcoin ETFs hitting the market. Greater acceptance and regulation could also lead to more stability. Today, the Bitcoin market is known for its wild price swings. But as Bitcoin ETFs become more mainstream, they could bring a level of calm to the stormy seas of Bitcoin trading. This could make Bitcoin a more attractive investment for the risk-averse, potentially leading to an increase in the value of Bitcoin itself. Another possible future scenario is the evolution of the Bitcoin ETF market. Just as we've seen with traditional ETFs, we may see the emergence of different types of Bitcoin ETFs. These could range from ETFs that track the price of Bitcoin to ETFs that invest in companies involved in the Bitcoin ecosystem. This would offer investors a wider range of options and strategies for investing in Bitcoin. Of course, all of these scenarios are speculative. The future of Bitcoin ETFs, like the future of Bitcoin itself, is uncertain. There are many variables at play, from regulatory changes to technological advancements that could drastically alter the course of Bitcoin ETFs. In the end, the future of Bitcoin ETFs is as unpredictable as the cryptocurrency market itself. As with any investment, potential investors should do their research and understand the risks before jumping in. Only time will tell. So we've been on quite a journey exploring Bitcoin ETFs. Let's take a moment to revisit the key points we've covered. Firstly, we dived into the advantages of Bitcoin ETFs. We discovered how they provide an accessible gateway into the crypto market for investors who may not be tech-savvy. They also offer a layer of security and regulation, which can be a comforting prospect in the Wild West of crypto. Then we ventured into the potential downsides of Bitcoin ETFs. We noted that they strip away some of the core principles of cryptocurrencies, like decentralization and autonomy. Moreover, they introduce an element of third-party risk, which is something that crypto was designed to avoid. We also compared Bitcoin ETFs with traditional Bitcoin investment. While ETFs offer ease and protection, direct investment in Bitcoin gives full control and potential for higher gains. It's all about balancing your comfort with risk and your faith in the potential of cryptocurrency. Looking ahead, we pondered on the future of Bitcoin ETFs. The crypto landscape is evolving rapidly, and Bitcoin ETFs are likely to play a significant role in shaping it. With the potential to attract institutional investment and bring stability, they could be a game changer. Whether Bitcoin ETFs are a boon or a bane, they're undeniably a fascinating part of the ever-evolving crypto landscape.